Over the weekend, the Trump administration imposed the strictest tariffs we've seen in decades on Mexico, Canada, and China. And these tariffs are a big deal, and they could drive big changes to the US economy, your real estate investing business, and your wallet. Here's what you need to know. Hey everyone, it's Dave from BiggerPockets, and today I'm going to review what we know so far about the new tariffs and what you as investors should be thinking about right now and what to keep an eye out for in the near future. Because this is, of course, an evolving situation, but I wanted to at least give you all as much information and my quick reaction based on what we know today. So here's what's happened so far. Trump administration imposed 25% tariffs on all goods coming from Mexico and Canada. They did exempt Canadian oil, that's just at 10%, and China also got hit with 10% tariffs across the board. And the Trump administration has said that these tariffs are going to be open-ended and will last, at least according to Trump, until the two border nations, so Mexico and Canada, do something about unauthorized migrants and drugs entering the U.S. Now, it's important to note that as of Monday morning, Mexico did announce that they've reached a pause with the Trump administration where tariffs won't be implemented for at least a month. But the policy objectives here of the Trump administration remain the same. They want to extract some concessions from Mexico and Canada on border policy. And the longer term play is that they want to boost domestic manufacturing. But just by the nature of tariffs, they impact the exporter, so Canada, Mexico, China, but also the importer, us. So let's dig in a little bit more on these policies. First and foremost, the nations targeted are actually the three biggest trade partners for the US. China's the biggest, followed by Mexico, and then Canada. And I want to explain how tariffs logistically actually work. When a US company imports goods, so let's say that you want to import agricultural products like cherry tomatoes from Mexico. This is actually a common agricultural input. So if you're an American company and you want to sell these cherry tomatoes in the United States, you buy them from, let's say, a farmer in Mexico. When the tariffs are implemented, that means when you import those, you're going to have to pay 25% more for those tomatoes. So the importer, again, the American company, then has some choices to make. They could absorb that cost and reduce their own profit margins, or they could pass those costs along to the consumer, or some combination of two. And this reason, the fact that American importers wind up paying more money, is why most economists believe that tariffs have a one-time inflationary impact on prices. We're not talking about the wage price inflationary spiral that can happen with inflation that we saw in 2021 and so on, but a one-time event. Now, of course, the Trump administration believes this is worth it to achieve the long-term policy objectives they've stated, for example, by spurring new domestic production because imports wind up costing more. But it's important to note that there's a good chance tariffs lead to inflation on certain products, at least in the near term, and perhaps long term, depending on where things go from here. Capital Economics, which is a research and consulting firm, believes that the PCE, which is the Fed's preferred inflation measure, could go up from 2.6% to 3.2% just from these tariffs alone. So it's not like we're going back up to the 7 or 8 or 9% that we saw just a couple of years ago, but it would reverse the downward inflation trend that we've been seeing over the last couple of years. So that's sort of the high level, but let's talk a little bit about the details and what would actually be impacted. And it really depends on the exporting country. So if we look at Canada, for example, the big one that people should note is oil prices. Canada provides about 60% of US crude oil, Mexico about another 10%. And so seeing a 10% duty, again, just as a reminder, 25% on everything other than oil coming from Canada, but they just put 10% on oil, that could have a short-term impact on oil prices at the very least. It could be long-term. Just this morning, Monday morning, it's the 3rd of February when I'm recording this, we did see oil futures go up. Now, Trump has said that he plans to increase domestic production of oil, which could offset this, but at least in the short run, we're probably going to see increased energy costs. So that's the main one from Canada. But as an investor also, you should note that lumber, if you're flipping or building houses, a lot of it comes from Canada, and 25% tariffs on that lumber will probably increase lumber prices. When we look at Mexico, the primary things here are agricultural prices. You see things like avocados, beans, tomatoes. So groceries in general, you also see beer, tequila. A lot of that is imported, and so that could get more expensive. Again, there is a pause on the tariffs in Mexico, but depending on where things go, if the tariffs go into place, you'll probably see increases in prices there. And then with China, it's a lot of electronics, things like smartphones, laptops, tablets. You also see, more consumer goods like toys, video games, that kind of stuff. And for me, actually, the big one that I'm really curious about is the auto industry, because most car companies, whether they're American car companies, European, Asian car companies, they have factories because they sell products in the United States. They have factories all across North America. And you see half finished cars crossing borders all the time. Just last year alone, 3.6 million cars, about half of imported cars by value, arrived from Canada and Mexico, with 2.5 million coming from Mexico alone. And that's like 22% of sales volume in the US. So this will impact American companies. Stellantis, one of the big three automakers, they make Jeep, Chrysler. 40% of their cars come from these countries. For GM, it's about a third, and for Ford, it's about a quarter. And Barclays, the big bank, estimates that if car makers don't actually wind up raising prices or revamping their entire production process, it would wipe out the entirety of Detroit's three biggest car companies' profits. Now, again, Trump has stated his intent to bring more manufacturing to the US, which could happen. But it will take some time, of course. Factories take years to build, so there could be some price increases, at least in the short run. Now, it's worth mentioning on the other side, there are some American industries that are going to welcome these tariffs. The big ones, the big winners, at least immediately, are going to be U.S. steel and aluminum industries, which are going to face less competition from cheaper steel from Mexico, from Canada, and from China as well. The other benefits to industries are going to take a little bit more time for us to see, so we'll have to wait and see what happens there. So I think the big question is what actually happens from the tariffs from here? Because if the tariffs that were announced over the weekends wind up getting implemented exactly as they are, we know a decent amount of what's likely to happen. But we've already seen things start to change. Canada already announced a 25% retaliatory tariff on US goods. We've seen Mexico just this morning announce that they have a pause negotiated with the Trump administration for 1 month. So things are probably not going to stay the same. It's probably instead the start of some intense negotiations that could reduce the overall tariffs. But it could also be the start of an escalating trade war or something in between. We just don't really know. But for real estate investors, I think the things you need to know are first and foremost, if you're just doing buy and hold investing, it's probably not going to impact you that much. But if you're in construction, if you're doing value add, if you're flipping, there are some products and commodities that will likely increase in price. Both steel and lumber are likely to see some increases in prices over the coming weeks and months because both are heavily imported from China for steel, but also lumber from Canada. Like I said, about 60% of our lumber imports come from Canada. I mean, the US does produce a lot of its own lumber, but of our imports, 60% come from Canada. So this could mean increases in lumber prices. As I said, energy costs have already gone up as of today. Not a huge amount, but they've gone up a little bit. So we're going to have to watch how oil futures over the next couple of weeks, which should have a modest impact on construction. But again, I don't think anything that's happened so far is going to be a huge concern. We're just going to have to keep an eye on them and see if things really escalate from here. The last thing I should mention is appliances, that if you're buying that kind of stuff for your rental properties or your portfolio from China, those could go up as much as 10% as well. So that's what we know so far. Hopefully this is helpful for you understanding just sort of the big picture on what's going on with tariffs and how they might work. We will, of course, update you as things inevitably evolve with this really important economic policy. For BiggerPockets, I'm Dave Meyer. Thanks for watching.